It's Monday, the 28th of June, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The share market is set to fall and economic growth will be hit as the numbers of COVID cases across the country surge. That's our main story. Also coming up in today's podcast, a strong weekend for home sales despite the lockdowns. Seven Group makes a serious bid for building materials company Boral, and Flight Centre introduces a generous way of retaining employees. Immediately after the podcast, stay listening for my chat to Dr. Christian Bayliss, the founder and chief investment officer at Fortlake Asset Management. But first, here's a brief look at markets. Wall Street finished stronger over the weekend, and the major indices had their best week since February. President Joe Biden's $1 trillion infrastructure plan, plus reassurance from Federal Reserve Chair Jerome Powell about interest rates, buoyed investors. While markets were mixed at their close over the weekend, the Dow Jones Industrial Average ended the week up 3.4%. The broad-based S&P 500 was almost 3% higher, and the Nasdaq finished 2.4% better off. European markets were generally higher, with London's FTSE closing 0.4% higher on Friday, and the Stoxx Europe 600 up 0.1%. The S&P ASX 200 closed up 0.5% on Friday, to 7,308 points. It means the index was down almost 1% for the week. The big story out of last week was the performance of the tech stocks, led by the buy now, pay later groups. The tech index was up close to 7% for the week. Brent crude is trading above $76 a barrel, up 3% over the week, and the highest since October 2018. The price of oil is up around 50% this year. The price of gold was broadly unchanged over the weekend. The Aussie dollar is trading at 75.7 US cents, and premium coking coal prices have hit their highest level since August 2011. That's great for Australian producers, even if they can't sell into China. The surge in new COVID-19 cases is set to take the wind out of the local economy, but coronavirus stocks have already begun surging. 30 new cases were reported in New South Wales yesterday, taking the Bondi cluster to 110. The Northern Territory recorded 4 new cases, triggering an immediate lockdown for several regions, including Darwin. Western Australia imposed some restrictions after a woman who had flown in from New South Wales tested positive. And Queensland, which recorded 2 new cases yesterday, reintroduced the 1 person per 2 square metre rule. Finally, a flight attendant was infectious while working routes involving Sydney, Melbourne, Brisbane and the Gold Coast. Not surprisingly, there's all sorts of border closures as well. The latest wave has put pressure on the federal government vaccine rollout. So far, 7.3 million doses have been administered, but less than 3% of the population is fully inoculated. Around 27% of Australians have had at least 1 dose of a vaccine. The figures in Canada and the UK are 68% and 65% respectively, while the US and Europe are both around 50%. The outbreak has put a question mark over Australia's economic pickup. The 2-week lockdown in Sydney will cost the economy around $2 billion. AMP chief economist Shane Oliver said about 6.6 million people were affected by the New South Wales lockdown, and they account for 25% of Australia's GDP. The good news was that after previous lockdowns, the economy has snapped back quickly after reopening. Investors have already begun pricing in the impact of closures. On Friday, the lockdown stocks outperformed. They're the ones that did well last year during the COVID restrictions. Kogan.com.au was up more than 6% on Friday, while Temple & Webster, JB Hi-Fi and Super Retail Group all outperformed. The biggest risk to the economic and share market recoveries has always been an outbreak of COVID. The Delta variant is particularly infectious, so there are fears that state governments won't be able to control the spread as quickly as they have previously. And that could hurt the economy. Until that question is answered, investors will be nervous. In a moment, the rest of the news you need to know this morning. In overseas news, Johnson & Johnson will pay the state of New York $230 million as part of a settlement in which the drug giant will move out of the opioid business in the US. The opioid industry faces 3,000 lawsuits across the country for its contribution to an epidemic of prescription and street opioid use. Earlier this year, consultant McKinsey & Co. agreed to pay $573 million to settle investigations into its role to help turbocharge opioid sales. Tesla is recalling 285,000 electric vehicles in China because of problems with their cruise control functionality, which could cause cars to speed up suddenly. And former President Donald Trump attended his first rally since losing last year's election over the weekend, and in a 90-minute speech claimed the 2020 election was stolen and wouldn't rule out running in 2024. He attacked the Biden administration and Republicans who didn't support him. He was indeed the same old Donald Trump. Locally, Sydney may have gone into lockdown on Saturday evening, but home buyers were out in force during the afternoon, with the city recording an 82% clearance rate from 1,100 auctions, according to CoreLogic. In Melbourne, the first weekend post-lockdown saw 1,400 houses go to auction and a 76% clearance rate. Anecdotally, prices were strong. Markets are now wondering whether regulators will step in to calm the surge in lending. The major banks have unveiled relief packages for businesses and individuals hurt by COVID shutdowns. It includes loan deferrals and support for customers suffering financial hardship. Individual workers who lose hours could also be eligible for federal government assistance. One sector who will need help is tourism, with the Transport and Tourism Forum forecasting the Sydney lockdowns will cost the national tourism sector $6.3 billion, including more than $2 billion in New South Wales. The federal government will release its fifth intergenerational report today, and according to media reports, it will suggest that Australia could be stuck with deficits for the next 40 years, unless it boosts skilled migration, workforce participation and productivity. The report attempts to forecast the state of the budget in 40 years' time, and it says the pandemic has exacerbated long-term challenges of an ageing population and shrinking workforce. Australia's population will reach close to 40 million by 2060, it says, with an average annual economic growth rate of 2.6% over the next 4 decades. Barnaby Joyce supporters are the big winners in a cabinet reshuffle of National Party ministers. A week after Mr Joyce took over the job of Deputy Prime Minister, supporters Bridget McKenzie and Andrew Gee will join the cabinet. Senator McKenzie will be Regionalisation, Regional Education and Regional Communications Minister, just 18 months after leaving cabinet over the sports grant scandal. And Mr Gee will come in as Minister for Veteran Affairs and Defence Personnel. The two Nats demoted were Darren Chester and Keith Pitt, who was a big supporter of former leader Michael McCormack. The latest news poll in the Australian newspaper shows support for Prime Minister Scott Morrison lifting, and the Coalition's primary vote unchanged at 41%. Labor's primary vote was also higher at 37%, and opposition leader Anthony Albanese's personal approval rating also rose. On a two-party preferred basis, Labor was just ahead 51 to 49%. The poll was taken after the Prime Minister returned from his G7 trip and after the Nationals' leadership spill and 2 state COVID lockdowns. Australia's exports of resources and energy are tipped to be more than $300 billion this financial year, the highest level ever, thanks to soaring iron ore prices as well as elevated LNG, thermal coal and base metal prices. Iron ore exports are close to half the value of total resources and energy exports. And the Department of Industry, Science, Energy and Resources expects even higher exports next financial year. That is one of the critical reasons Australia has done so well economically during the pandemic. Home insurance premiums are on the rise following 11 large natural disasters over the past 12 months. The big insurers Suncorp and IAG, as well as Allianz, have all forecast higher premiums, and a note from Morgan Stanley analysts says that home premiums could rise by 8%. Transurban may finally be able to start tunnelling its Westgate project in Melbourne early next year after signing a contract with a recycling hub to take contaminated soil during construction. The $6.7 billion project is more than 2 years behind schedule, in part because of debate over soil contamination removal. The 17-kilometre motorway is now due to open in late 2024. Seven Group has upped its offer for Boral Group by at least 80 cents to $7.30 a share, conditional on Seven getting 29.5% of the company by the end of this week. Seven already owns 24%, and the new offer price is a 12% premium to what Boral was trading at when the initial approach was made. Boral's shares finished at $7.34 on Friday, up more than 6%. The offer will increase to $7.40 if Seven gains 34.5% of the group. Boral is now in play. City Australia is moving into the buy now, pay later sector, taking on Afterpay and Zipco by undercutting the two established players' merchant fee charges. Already, Citi's MasterCard offering allows customers to defer payments, but later this year it will introduce buy now, pay later payments. Citi is selling its consumer division, but it still wants to launch the product, most likely under a different brand. Flight Centre has launched an innovative staff retention program. Employees will be granted share rights if they stay at the travel firm till the end of next year. With staff shortages chronic in some industries and other industries like travel and tourism continuing to be buffeted by lockdowns and restrictions, Flight Centre will give a one-off grant of 250 share rights, which will vest in February 2023. It will cost the company around $30 million based on 1.9 million share rights being given out. The High Court on Friday refused to grant special leave to appeal to the insurance sector over an earlier judgment which found that the Quarantine Act did not exclude COVID-19 and insurers could not rely on them. It means insurers could be forced to pay out business interruption claims based on coronavirus. The Royal Commission into Crown Resorts continued on Friday, with the gaming giant's head of security and surveillance saying Crown didn't put security staff in its high roller rooms, even though it knew that its most lucrative junket partner was backed by triad gangs. The premium rooms also were the last to install facial recognition. The hearing continues, but as I said last week, it just gets worse and worse for Crown. Victorian Premier Daniel Andrews officially returned to work last night at 10 p.m, having been off since slipping downstairs in a holiday home back in March. His recovery has been long, but he's back at work. Good luck to him. And we're heading into the final few days of the financial year. Remember the super guarantee increases from Thursday, the first day of the new fiscal year. If you're looking for some tax deductions, you've got 3 days to donate to charity. Super funds are hoping for a good few sessions in equity markets, so returns to members of balanced funds can hit the 15% mark. And there's a range of other changes that will be introduced on Thursday that can help minimise tax and save for a first home. Up next is a Fear and Greed daily interview, and today we're talking to Christian Bayliss, the founder and chief investment officer at Fortlake Asset Management. We're looking at fixed-term investments and in particular at a push to give smaller investors access to more conservative asset classes like bonds. Christian does a great job of explaining that whole sector of investing, so it's well worth a listen. Up next in the Fear and Greed playlist. And after that is our other podcast, The Week Ahead, where I'm joined by economist Stephen Koukoulas for a look at what's making news in the world of economics this week. I'll also get the Kook's take on what happened in the last 7 days, so it's a great way to get across everything you need to know before you start work for the week. It's Monday, the 28th of June, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.